Hey everyone, and welcome back to The Explainer. I am so thrilled to have you here with us today. It is Sunday, June 21st, 2026, and look, our goal today is simple but absolutely crucial. We're going to clearly map out Bitcoin's critical price levels based on the very latest market data. The whole market is kind of holding its breath right now, so whether you trade, hold, or you're just fascinated by crypto, the stuff we are unpacking today is totally essential for your strategy. Okay, let's dive right into this. Here is our agenda for making sense of the market today. 1. Current Bitcoin snapshot. 2. Unpacking technical indicators. 3. Market sentiment and fear. 4. Key support and resistance. 5. Future price scenarios. And finally, 6. Risk management essentials. All right, section 1. Current Bitcoin snapshot. Setting the scene. Let's start by getting a totally objective look at exactly where we're starting today. So right this second, Bitcoin is sitting at exactly $64,227. That right there is our anchor point. We always want to ground ourselves in the present reality before we even think about looking at projections. But, a price tag alone doesn't really tell the whole story, does it? We need some context. Over the last 24 hours, we've seen about $8.37 billion in trading volume. Now, to put that into perspective, $8 billion is huge in traditional finance. But in the 24/7 crypto world, it actually suggests folks are playing a bit of a waiting game. It's not the explosive volume we see during major breakouts. Analysts are expecting the weekly range to sit somewhere between $65,200 and $66,000. However, right now, we're actually trapped a bit lower, just bouncing around in a current trading range between $62,964 and $64,178. Moving right along to Section 2, Unpacking Technical Indicators, what the data says. We know the price, but is this current zone structurally sound?
And this brilliantly illustrates the immediate tension we're seeing in the market right now. Take a look at the RSI, the Relative Strength Index, which basically measures how fast the price is moving. It's sitting at 49.74. That is perfectly, and I mean literally perfectly, neutral. Buyers and sellers are just at a total stalemate. On the flip side, we have the 50-day exponential moving average, which gives us a great read on short-term momentum. That's sitting at 65,749, which signals a neutral to slightly bullish energy. So short-term data is giving us a really mixed, almost hesitant picture.
But when we zoom out a bit and look at the broader technical consensus, a much clearer trend emerges. Out of 30 different technical indicators analyzed, only 10 are giving us bullish signals. The remaining 20, they're flashing completely bearish. Because the weight of the indicators is heavily skewed toward the downside, the overall technical sentiment at this very moment is decidedly bearish. Which brings us to Section 3, Market Sentiment and Fear, the psychology of the market. Technicals are only half the puzzle, right? We gotta look at human emotion. 23. That is the exact score right now on the Fear and Greed Index. On a scale out of 100, where 0 is absolute panic and 100 is pure mania, a score of 23 puts us firmly in a state of extreme fear. The market is scared. People are incredibly anxious about where this is heading. But you know what's really fascinating about this? Extreme fear has historically been one of the absolute best times to buy. I know it sounds totally counterintuitive when panic is in the air, but it echoes that old investing rule: be greedy when others are fearful. Seasoned traders don't just see this extreme fear as a warning sign. They actually see it as a massive strategic opportunity to accumulate while everyone else is indiscriminately selling. All right, Section 4, Key Support and Resistance, mapping the levels. Let's resolve some of this uncertainty by mapping out the actual numerical floors and ceilings that matter most right now.
So, the crucial point is, how do these specific levels stack up? Up top, our ceiling, or our resistance zone, is sitting between $65,500 and $66,000. Just below that, at $65,192, is the 200-day moving average. Now, as long as we hold above that specific line, the medium-term market structure actually stays pretty constructive. Then we drop down to where we're sitting right now, around 64K. If we fall from here, our first major floor, support 1, is right at 62,964. And if that floor collapses, boom, we drop to support 2 at 60,000, which is a massive liquidity zone.
Let's actually pause on that $60,000 level for a quick second. Why do we call that a big liquidity zone? Well, historically, this is a price area that acts like a giant magnet for institutional buyers. When the price dips to 60K, the major players tend to step right in to scoop up Bitcoin, and that provides a massive cushion, or liquidity, to the market.
Section 5, Future Price Scenarios. If-then predictions. Now that we've got our map, what happens if we actually break these critical levels?
Okay, so here are the two primary triggers analysts are watching like a hawk today. Trigger 1 is a break above that $66,000 ceiling, but it specifically has to be backed by high trading volume. That's vital because volume proves big buyers are actually supporting the move, and it's not just a fake out. Trigger 2 is a breakdown below our first major floor at 62,964. And here is exactly where the price could travel over the next 7 to 14 days based on those triggers. Step 1. If Bitcoin manages to hold that 63,000 area this week, analysts predict we could see a strong bullish move pushing back up through 66K and then targeting 68,000 and beyond. But Step 2 gives us the bearish reality. If we lose 62,000, the next stop is almost certainly going to be a heavy drop straight down into that $59,000 to $60,000 institutional liquidity zone. Finally, Section 6, Risk Management Essentials, Staying Safe. With this kind of volatility staring us in the face, we absolutely must talk defensively. Look, no matter how confident you are in a chart, the golden rules always apply. Always use a stop loss to protect your capital. Never risk more than 2% of your entire portfolio on a single trade. The crypto markets literally do not care about your feelings, so always do your own research. And of course, a very firm reminder, the analysis we went through today is simply an explanation of the data. It is absolutely not financial advice. So, we've unpacked the 64K anchor, the bearish indicator skew, the extreme fear, and those critical thresholds at 66K and 63K. Now it is your turn to put all these concepts into practice. Based on the structural analysis we just went through, what is your Bitcoin price prediction for this week? Are we pushing to 68K or dropping to 60K? Think it over, apply the data, and keep learning. Thanks so much for joining me today on The Explainer, and I'll catch you next time.